Hi, this is Ron Z. Let's look at some charts. This is part 2 of the SNP weekly charts. In the first video we looked at this trend line and this break above the trend line, and what normally happens historically is that the S&P falls either to the lower trend line or the lower support line and occasionally breaks below it. We also talked about potential resistances that my research says could be found between 2000 and 2140. You can read more about those resistances in my articles on examiner.com. Let's look at the S&P constituent charts for some supporting data that are supporting indications that we might be coming to a resistance that could cause a larger drop. This first chart is Agilent. It's a 24-year monthly chart. We see Agilent came to a resistance it's seen right here. It broke slightly above it, but has become very flat since. Let's look at the daily chart on it real quick. You can see it trended lower, rebounded and trended lower. Now it's held support that it found in that initial retreat, which is important. If we see a lot of the constituents breaking supports that it's seen earlier in these retreats, we can look for the S&P to fall deeper, or we could see a fall or deeper fall on the S&P 500. Here's Alcoa. Now Alcoa isn't quite back up to resistance it's seen earlier. It established a resistance back here. It turned into support here and returned into resistance here. It's in the same range. It's not exact, but it's in the same range here. Now Alcoa hasn't reached that resistance level yet, but it's coming close. We see on the daily that it's starting to flatten out. Now this could be because the S&P has run into the $100 resistance, and it's gone kind of flat for the last few weeks. Now this is only a 1 week period too, but it's possible that this could be or a little over a week. It could be caused by that resistance as the S&P hit that resistance. Here's Apple. Now Apple hasn't come to that resistance level either, but it's heading towards it. Now as we look at the daily charts, Apple broke very well right here and started a pretty steep uptrend, and the reason it broke up right there is it announced a 7-for-1 stock split, it increased the dividend, and it had a very good earnings report. Since that time, as it's neared that all-time high, the slope has diminished. Now Apple had another very good earnings report right here, but it didn't get the stock going again. Now this appears to be somewhat of a rounding pattern as it comes into that all-time high. Now whether Apple can break above that all-time high or not is to be seen yet. We'll look at AbbVie. AbbVie's long-term chart is short because they were spun off from Abbott Labs, but we see AbbVie come to a new high here, and since it's had trouble. When it broke to this high from previous highs back here, it broke above it here and couldn't hold it, and it broke above it here and couldn't hold it. Now we're seeing a lot of failures or flatness in stocks that break above all-time highs or to new all-time highs, or above short-term resistances, long-term resistances, and they aren't able to continue in these runs like they were before. This is Amerisource, pardon me. Now Amerisource was in a flatness here, and they actually did recently break above that resistance, but you can see what they did in that first day is they started about here, they finished about here, and in between they were way up here. Now they've started to run, but a lot of stocks aren't able to break above the highs they've seen in that first day, or let's look at one. Here's Adobe. Now we'll look at the long-term charts first. You can see Adobe broke above the resistance they were seeing. It had kept them flat for quite some time, or flat to down for quite some time. But Adobe had a nice earnings report. It started higher, continued higher, finished lower, and hasn't been able to break above that high. We're seeing that initial high on that good earnings report. We're seeing that in a lot of stocks, and actually Adobe is pretty much slowly trended off of that. The fact that stocks aren't trending in this type of a trend, which is a very bullish trend, you know, they come up, drop a little bit, come up, drop a little bit, come up, drop a little bit, instead have gone into more or less of a jagged pattern, choppy. I don't know if you've heard the old saying, choppy is toppy, but a lot of stocks are in this choppiness on the tops. Look at Analog Devices. Now, Analog Devices came up to this high, broke slightly above it, and in doing so it started to be kind of choppy and broke to that high, and now it's broken way below it. Now it's broken below, slightly below that support, but it's rebounded back above it. Now this time I'm not real concerned about their chart. They're probably a better support level down here to tell if they're going to go really deep, but they are one of the few that have broken support too, although they've rebounded back above it. Now let's look at a few of the Dow charts. We know the Dow, all the Dow components are in the S&P 500, but this is American Express, the 24-year monthly chart. We see they have come to a high. They've slowed their ascent. They've come kind of flattish, and as they hit those highs, they've been flat for quite a while here now, and they're getting kind of choppy in this. They're not in this small up and down bullish run type. They're in a choppy topish type of a pattern. Again, we're seeing that in quite a few of the stocks. This is Boeing. We can see Boeing come up to that high, and it hasn't gotten back to that high since. This chart won't show it unless we went into a longer time frame, but it's failing each time it's trying to get up there, and it's getting to a lower high also. So this chart is in a downtrend, although it's rebounding good. It's kind of a choppy downtrend. Here's Caterpillar. Now, Caterpillar is in a nice run. They haven't come back to all-time highs, so they could go higher, but they've flattened out in this run recently over the past few months, and really recently have broken lower on an earnings report that investors didn't like, due to softness in sales and mining equipment. Now this is Cisco. They're about a little bit below this high here, and a little bit below that high there, so they could have some upside left, but as we see today, they rebounded back out of it, but they didn't do so well in that initial spike lower now, and they're kind of flat too, and they're getting near that high. They have some upside potential. Here's Chevron. Chevron is in a nice run. They're a little bit, they've been a little bit choppy the whole time. They're in a nice run, but in the last couple months they aren't pushing really good high anymore. They've kind of reduced their slope somewhat. from what it was earlier. Now, and they're also showing this some of this choppiness in their patterns. Here's DuPont. DuPont hit a level of resistance that they've seen back here. Now, they also had an earnings report that wasn't to investors' liking, that gapped them lower. They've been pretty flat off of that. They haven't broken lower. They haven't fractured any lower supports back here, but they've been flat for a long time now. And if they don't start moving higher, the longer stocks hold without making gains, the more likely investors are to look someplace else to find those gains. So flatness tends to turn into downtrends after a certain amount of time, and a lot of stocks have been in flatness for a long time. Here's Disney. Disney has a great long-term chart. This is a beautiful chart. Look at that run. Now, last couple months, they aren't in that run that they were in earlier. They're kind of rounding out. GE found resistance at a previous level that's below all-time highs, and is pulled back from it earlier, but wasn't able to rebound back and recapture that resistance level, and now is trending down again. Goldman Sachs, again, up to a resistance level that they've been at for quite some time, or near, and kind of choppy. They're coming back up to that resistance level maybe, but they seem to have found resistance at about here too. So are they going to go higher, or are they going to pull back? This is a question right now. And there's no clear indication which way stocks are going right now. There's a couple of them that are coming higher. There's some of them that broke support. Right now, it's a coin flip, it looks like. We could see a lot of stocks break resistance, or we could see a lot of stocks start falling off of these resistances again, or the ones that are in downtrends break these resistances and fall lower. If we see a lot of them moving in one direction or the other, the index is likely to follow. Now, the fact that it's in this pattern that often shows a potential for a larger drop, and this research, which has been fairly close in a lot of instances, coming up here, predicting significant drops off these tops. My interpretation wasn't right on a lot of these. It was pretty close on a lot of them, but what I'm seeing here is a potential to drop to one of these two lines, or possibly to this lower support line from a high that will probably come in here. It could pull back from here. We don't know that for sure either. We don't know that there's going to be a drop from here either. But the chart formations right now lead me to believe there's a possibility that we could see a larger drop on the SNP in the not too distant future, and probably within this range here. That's my take. You have a great day trading. This is Ron Z.